Hello, everyone. This is Arthur Robinson Jr. I am the creator of PowerfulInterviews.com. I'm going to welcome you to this video. In this exclusive interview that I'm going to reveal to you, you're going to hear from a great friend of mine. His name is Arnold Goldstein, and he is the asset protection attorney. So right about now, go get your pen and your pad and write down some notes. What you're going to hear in this brief interview, you're going to hear about asset protection. You're going to hear about what's the difference between asset protection and business asset protection. What's the difference between LLCs, S corporations, C corporations, sole proprietorships, and much, much more. So just sit back and relax, write down some notes, and this exclusive interview that I'm going to reveal to you is going to change your life. So check it out.
Good morning, everyone. This is Arthur Robinson Jr., and today I have another special treat just for you. Today I'm going to be interviewing a great friend of mine, and he is an asset protection attorney. His name is Arnold Goldstein. And Arnold Goldstein, the founder and member of Presser Goldstein, has over 40 years' experience as one of the country's foremost asset protection specialists and has helped protect the wealth of more than 20,000 individuals and businesses from lawsuits and creditors. Arnold Goldstein has authored over 100 books on law and asset protection and has been featured in numerous financial and professional publications and on many radio and TV shows, including CNN, CNBC, and NBC's Today Show. And that is an awesome resume. Without further ado, I'd like to welcome Arnold Goldstein to the call.
Good morning, Arthur.
Well, good morning to you, Mr. Arnold. How you doing?
I'm doing wonderful. Thank you.
Well, I'd like to thank you, Arnold, once again for taking time out of your busy schedule to educate the listeners about the importance of asset protection. I gladly appreciate it.
Well, today it's a very important topic, and I can't get out the word often enough that people have to protect themselves today, particularly in this tough market.
Okay, so what I would like to know, let's talk about corporations. Can you explain to my listeners in layman's terms what exactly is an LLC, a S corporation, a C corporation, and sole proprietorships?
And I think that's an excellent question because, well, it's rather elementary, perhaps it's only elementary to an attorney like myself who deals with these all the time. And you know, I teach law in a business school. And this is the most important question I give them on their final. In fact, it's a question on the final for tomorrow. Can you explain the difference between, the major differences between these various entities? So that's very important for layman and business people to understand. The sole proprietorship is simply you as an individual going into business. You and the business are one and the same. Therefore, they're easy to set up because there's no formalities required. You don't go to the state, this, that, and everything else. But the disadvantage, it comes down to liability. Since you and the business are one and the same, every debt of the business is your personal debt. If you have amassed $200,000 in business creditors, those business creditors can take your personal assets. To me, that immediately knocks out the sole proprietorship as an intelligent way to go into business. It's a stupid way to go into business. Why would you risk your personal assets and your personal credit rating, etc., on your business success? When for a couple of $100 you can incorporate or set up an LLC that would immunize you personally from the business debts. Now that's just, again, common sense. There are other, features of each, but it comes down to liability protection. And so the sole proprietorship gives you no protection, which means that for your listeners, two-thirds of which statistically are probably operating as limited partnerships. Strike that, as sole proprietorships. I don't care how small their business or how safe they think their business is. I don't care if they're running a business out of their den or their bedroom. I don't care. You never know how you're going to incur liability for your business. set up either a corporation or an LLC to run your business. You can't get better insurance than that. So that's the most important advice I would give them. Now, as far as a general partnership is concerned, that, of course, is two or more people who go into a business activity without a formal structure. In other words, one chartered by the state. It's based on contract by agreement to share profits and losses in some proportion. And that's worse than a sole proprietorship to the extent that both partners, or 10 partners, if it's a 10-person partnership, are jointly and severally, that means individually and collectively, liable for all the debts of the partnership. So you could be the rich partner. Your other partner could do something on behalf of the business that incurs a tremendous liability, and you could be the one to lose all your personal assets if the partnership can't pay the debt. Why would you do that? That is only compounding it. And so I would never let a client go into a general partnership form of a business organization. So that really leads you down to three choices. You get two, the corporation and the LLC, but the corporation breaks down into a C Corp and an S Corp. The C Corp, the difference between a C Corp and an S Corp is simply that of taxation. There is no difference in liability protection. They both will equally protect you. So lawyers really don't care which one the client operates under. Now, you're really setting up a regular corporation when you set it up. So whether you become an S-Corp is simply what they call an election with the IRS. If you wish to be an S-Corp, you're really saying to the IRS, you wish to be taxed as a partnership or proprietorship if you're a single stockholder company. And so it's a taxation thing between you and the IRS. With a C corporation, whatever the profits are of a C corporation, the corporation pays a tax on it. If it pays dividends, there is another tax to the stockholders for dividend income. If it doesn't pay a tax, the profits are kept in the company's retained earnings. But there is the disadvantage of potentially double taxation. The corporate tax, and again, the dividend tax, if and when dividends are distributed. But other than the taxation features, there is no liability distinction between them. There are some ownership restrictions with an S corporation. For example, you have to be a natural person to own an S corp. It can't be owned by a trust. It can't be owned by another corporation or a limited partnership or an LLC, et cetera, et cetera. That's a disadvantage from an asset protection point of view, because since it has to be owned in an individual's name, well, there are a couple of exceptions to that, such as a single member LLC or a special offshore trust, but as a general rule, it's more difficult to protect the shares, the ownership in the corporation, than it is with a C corporation that can be owned by a protective entity. So that's the distinction between the C and the S. Which should you have? That's really a taxation issue. And I defer usually to the client's accountant as to whether he wishes to make the clients, once we set up a corporation, an S Corp or a C Corp. We may try to do different things to protect the shares in one case than the other. We have more options with the C Corp. That's it. The LLC is a relatively new entity. It's only 15, 20 years old, depending on what state. And in that the LLC is an attempt to merge the best features of all these different entities. The corporation, particularly the features of the corporation with the corporation, whether it's an S or a C, with the limited partnership. Now,